Are you tired of paying rent? Well, at Carrington Mortgage, we hate rent. Visit wehaterent.com and find out how you can be a first-time home buyer. We'll make it easy for you. Or call us at 918-394-5626.
Besides the great agents at TulsaLuxuryPropertyGroup.com, one of the best things about being a member is getting to see all the fabulous Tulsa area homes. And we're at one that's magnificent. This one-of-a-kind South Tulsa estate sits atop a bluff overlooking the beautiful Arkansas River Valley. It's a securely gated estate on 4.5 acres. There are a total of 5 bedrooms, each with a private bathroom, 7.5 baths in total, and a 3-car heated and cooled garage. Ceilings and porches in various areas around the home are appointed with reclaimed beams, assembled on site for a historically rustic look. A chef's kitchen with professional appliances, granite countertops, and ample space for food preparation are all open to entertainment space. The recreation room comes complete with multimedia services and a wet bar. There's also a beachfront pool adjacent to a relaxing, shaded patio and outdoor kitchen. This home is offered at $3.2 million. And additional amenities available include a 20-stall horse barn, gymnasium, offices, massage rooms, riding arena, and a guest house. Learn more about this and other fine luxury homes around the Tulsa area at TulsaLuxuryPropertyGroup.com or call 918-739-0397. Now, on the line, we have Mike Tedford, who I have been Mike, I've been wanting to talk to you about this since you sent me the text message and said this was the topic, because I don't think people really understand how common it is that a car does drive into a house.
Well, I tell you that in my personal experience, the first time, or I guess I should say, the one time I got the phone call, it was from my Claremore office, and the staff called me. They said, "We've evacuated the building. We're standing across the street. The wrecker service is trying to pull the car out of the building, and the fire department is standing at the ready in case the gas explodes."
So what do you do?
Well, one of the reason why I bring that up is because of the fact that what went through my mind at the time is in the state of Oklahoma, 53% of drivers either don't have insurance or don't have enough insurance. Now, I was fortunate in that particular example that I gave that they were able to get the gas shut off. Had the car ignited that gas meter and burned our building down, she would not have had enough coverage.
They don't think about the domino effect of all the other things that could happen as a result of one bad accident.
That's exactly right.
Mike, I'm going to have to take a hard break here in just a second. 299-2345, your telephone number, 918-299-2345, or tedfordinsurance.com. I want to express how important it is to have your insurance fully understood before you have some type of unexplained, unexpected, that's what insurance is all about, a catastrophe or tragedy that you do not have money to recover with.
Have a good idea what your insurance is going to cover before you're looking at a car in your living room.
Right. Mike, thank you very much. You're listening to The Future of Real Estate, Tulsa's source for local real estate news and information.
Today I want to talk about the 5 things that I think everybody should know when they're walking into the purchase of a new home. And the first item being, get your pre-approval first. What you want to do is call a lender or a bank that you trust that can start your pre-approval process and really determine what your income says you qualify for. Second thing is, don't buy if you're not going to stay for at least a few years. If you purchase a house and then you sell it within, say, a year, 6 months, you may not be able to get your investment out of it, and you may actually lose money if you don't put enough down. Number 3, aim for a home that you can afford. I can tell you what you qualify for, but more times than not, most people have a predetermined number in their head of what they can afford. And so you know what that number is. Make sure you share that with your lender rather than just say, what do I qualify for? The fourth item is, you don't have to have 20% down to purchase a home. And we talk to people every day that are under the assumption that they can't buy a house because they have to have a large down payment because of everything that's happened in the mortgage business in the past few years. And the business is constantly changing. However, you do not have to have 20% down to purchase a home. And the last item, number 5, is get professional advice from somebody that you can trust. The internet's a great tool for you to get resources and to do research, but don't rely on that solely. Make sure that you get on the phone or in front of a mortgage or real estate professional to ask those hard questions about the stuff that maybe you don't understand, rather than relying on blogs or stuff that you find on the internet, because there is a lot of good stuff out there, but there's some stuff that'll lead you the wrong way. So I want to make sure that you get professional advice. Talk to someone, any real estate broker, realtor, mortgage banker will be happy to sit down and talk to you, I'm sure, either in person or on the phone. So make sure you get that professional advice from somebody that you can trust.
Often a divorcing couple has one home to sell, and they each want to purchase a home individually. That can create some legal dilemmas when it comes to real estate, and here to tell us about it, David Kiesling of Richardson Boudreau. What do you recommend to a divorcing couple?
Well, if they're intending to purchase separate homes, first thing they need to be aware of is that they cannot encumber the assets of their marriage by purchasing other homes outside immediately.
Once they've filed that divorce,
Yes, sir.
there's a restriction against that, so you're kind of on hold.
It's an automatic temporary injunction that restricts them from encumbering or putting any type of lien on the assets of that marriage.
Well, many of my clients may go purchase a home, but the closing is held off until after the divorce is finalized. Is that a good option?
Well, it is a good option because at that time, all of the assets and who owns what property and who has rights to what property would have already been defined by the courts, signed off on as a final agreement, and then they would not be required to get the signature of the other spouse prior to closing.
Okay. Qualification, of course, can be something that is, for your loan, can also be hindered by that divorce process. And the 1 to buy, 2 to sell rule can crop up, and you don't want to close ahead of your divorce being finalized, because then that gives your spouse that you're trying to separate from one more asset that is part of the property together, correct?
Potentially it could after you separate and file that divorce. Typically the assets that you acquire after that time period would be considered separate assets. However, from a financial perspective, you may be relying on, let's say, support alimony, for example, that you may not be getting because that divorce is not final and you don't know what the court's decision is going to be on that.
So you're taking risks that you don't really know what the final outcome is going to be.
That's exactly correct.
David Kiesling, Richardson Boudreau Law Firm. You're watching The Future of Real Estate. I'm Daryl Baskin. You're listening to The Future of Real Estate, Tulsa's source for local real estate news and information. I'm Daryl Baskin of the Baskin Real Estate Specialists at McGraw Realtors. We want to address thousands of homes. HomeGuideTulsa.com. How about some of our featured properties? 10481 South 86th East Place. $449,000. 5 bedrooms, 4 baths. Courthouse says 4,531 square feet. So a lot of stuff that you don't see when you're just walking through a house. The nighttime lighting, professional lighting package that's on this property. Corner lot with a pool. 2 bedrooms and 2 full baths downstairs. That's 2 suites downstairs. Office with bookshelves, bonus room, nursery, and a game room upstairs. How about one more? 7328 East 111th Place in Bixby. People can't always make a whole lot of sense out of these addresses when I just call them off. How about 111th and Memorial?
There you go.
That's a good way to tag this one. $359,000. 4 bedrooms, 3 baths, 3 full baths, 2 half baths. 3,568 square feet. Priced below market in this neighborhood. 3 bedrooms downstairs, old world styling. 3 bedrooms downstairs with a home of this size. Old world styling, so it's a newer design. And the biggest selling feature here, 3 bedrooms, all with private access to a bathroom. That's 7328 East 111th Place in Bixby. Want to address thousands of homes. HomeGuideTulsa.com. I'm Daryl Baskin. You're listening to The Future of Real Estate. Coming up in just a moment, stop by TulsaForeclosure.com, and we'll close with Montgomery Exterminating's Bug of the Week. Find your next vacation home at TulsaLuxuryPropertyGroup.com. Shop from a world of vacation and luxury properties at TulsaLuxuryPropertyGroup.com. When you buy real estate, you'll have the option to buy owner's title insurance. Here to tell us how that works, Ann Rollins, Closings of Tulsa. And there's lender's insurance and owner's insurance. And if you're getting a loan, you obviously are going to be required by the lender to buy title insurance. But that owner's policy is an option. Should you get it?
I would recommend that every buyer get owner's title insurance. It's the cost is more economical when they buy at the same time you're insuring the lender, because a lot of the groundwork, a lot of the work has been done, and
That's
you're paying
at closing.
for it. That's correct. At closing.
So it's just a little bit more money to get that.
That's right.
Now, if you don't buy, here's a trick for you. If you don't buy owner's coverage at the same time, it's going to look like the lender's policy is really expensive. If you add owner's to it, it's going to look like the owner's policy is really expensive. But the point is, the net difference to add that owner's policy is not that much money.
That's correct.
And if you're buying that property and you're planning on staying there for a period of time, the value of the owner's title insurance is actually going to increase as you pay down the lenders. And if you just get lenders and you're paying that down, then all of that equity that you're building as a homeowner or a property owner is going to continue to be at greater and greater risk because you don't have coverage as an owner. And I think that's what most people don't understand as they're making this determination of should they buy this coverage. What does it cover?
It covers mistakes by an attorney or errors by an abstractor, forgeries, documents that might have been signed by people not of legal age, or if they were intoxicated, they could come back and say they were not of sound mind when they signed a document. So there's a lot of things.
If you really think about the process of transferring property, how do you know the papers that were presented were good? And then that's what really makes you think title insurance is a pretty good deal because I've got a lot of money on the line here.
That's right.
Well, how much does a typical title insurance policy cost? Are we talking about thousands of dollars or just hundreds of dollars? Hundreds
of dollars. It's based on the sales price, and it's around $3.50 per thousand of your sales price would cover
very interesting.
you. Mm-hmm.
And that's a pretty small amount when you consider the risk is you could have serious challenges in selling that property to someone else if you're having questions, or if someone is questioning your title, your ownership of the property.
That's right.
Ann Rollins, Closings of Tulsa, thank you for your expertise today. Mold damage is the big buzzword for property owners. What's good? What's bad? Is it dangerous? Of course, some of it is. Here to tell us about it, PCC Cleaning and Restoration's Roger Fisher, an expert who cleans this up all the time. We could not ask Roger for a better backdrop than this property. Here with this door behind us looks like it's been faux painted. The mold on it is so bad, and this is real mold. Tell us about what we're looking at.
Well, what we're looking at here, it's definitely mold. First thing you need to do is have it tested to find out if it's toxic or non-toxic, so you'll know which way to go at it in. If it's toxic, you have to do negative chambers. You don't want it to cross-contaminate. So the important thing is have it tested first, but number one, keep moisture down in your home.
Well, if it's toxic, first thing you need to do is put on a white suit.
You have to suit up for it. You have to wear a face mask as well as the white suits, as you call it, which is Tyvek's, because you cannot be exposed to it if it is toxic.
Well, I have a feeling something on this wall here is toxic. So really, how bad is it if you're in a building that has toxic mold?
Well, that would be up to the doctor, but it's not nice to be exposed to it. What I tell customers is it's kind of like playing with a snake, saying, hey, is it venomous or is it not? Like venom on a rattlesnake is toxic. Well, mold is toxic if it's Stachybotrys and in a family of that. So that's how I explain it to people. It is important to go at it in the right manner and have it tested to find out.
If you're concerned about mold in your home, what should you ask someone if you're hiring them to clean it up? I would imagine there are a lot of less than qualified people to clean up mold in your house.
Well, you want to make sure that they're certified through the IICRC Institute. And as well, first and foremost important thing is have it tested by a hygienist to find out what you're dealing with so you can get a correct estimate done on it.
PCC Cleaning and Restoration's Roger Fisher. Roger, thank you for your expertise on it. And gosh, let's get out of here.
Hi, I'm Steve Currington with Currington Mortgage. Are you looking for a local lender that can walk you through the process of buying the next home or refinancing your house? Well, Currington Mortgage is local. That means we've got local underwriting, we fund locally. Everything happens right here in Tulsa. That makes your process easy, simple, and no surprises at the closing table. Call us today at 918-394-5626 and find out how we can make it easy for you.
Hi, my name is Mike Tedford with Tedford Insurance. Like many of you, I've inherited things from my family, valuables such as jewelry, silver, firearms. Many people aren't aware that a homeowner's policy limits $1,000 for those items. So if you have silver, collections of coins, jewelry, firearms, you need to discuss having them scheduled specifically onto your insurance policy. Those things can be scheduled individually or in groups. And when you do something like that, you're picking up additional coverage because we have something that we call mysterious disappearance. And mysterious disappearance is it didn't get stolen, but something happened to it, it's missing. And when you have something scheduled on, such as a ring or a watch, you pick up coverages like that. You also eliminate a deductible. Deductibles go away when something's specifically scheduled on. Unlike your contents, where if there's a fire, you may have a $500 or $1,000 deductible. So the next time you're looking at that family heirloom, the jewelry, the silver, or the firearms, think of calling Tedford Insurance at 918-299-2345. I'm Mike Tedford with Tedford Insurance. The next time you need a quote for your home or auto, call Tedford Insurance at 918-299-2345 or get a quote online at tedfordinsurance.com.
Or if you're a home buyer, low interest rates, prices are suppressed because we've had a very slow 2-3 months. I mean, you look at the statistics. I don't like to talk about it too much. Now that I'm seeing kind of the light at the end of the tunnel, I like to talk about it because now's the time you can jump in, get some of those good deals. People are saying, I've been holding out, I'm ready, I'll take a good offer. Give me a decent offer and I'll run with it. If you're a home seller. Home buyers, that's what you're after. 14846 South Vandalia Avenue. This is in Bixby. $299,900, 3 bedrooms, 2 baths, 2.5 baths. Just a little under 3,000 square feet, a patio home. That's a 0 lot line, so one side is built on the lot line on one side, so you have great courtyards, still a backyard that you can enjoy, wraparound back porch. How about 6350 South 249th East Avenue in Broken Arrow? $280,000, 4 bedrooms, 3 baths. A mini ranch, how about 2.87 acres, more or less? 2.87, you say more or less. All right, well you got to. You just got to cover yourself. Attorneys have a heyday with that. 4 bedrooms, 3 baths, almost 4,000 square feet, about 3,800. And here's another one. In Delaware Point, Jink Schools, down by the river, 2936 East 102nd Street. $249,000 is the price. Listen to all this for the money. 4 bedrooms, 2.5 baths, 3,000 square feet, new carpet, formal living and dining, island kitchen, open to the family room, nice great room, family room with a vaulted ceiling patio that's enclosed, screened so you can enjoy it during those buggy times of the summer. HomeGuideTulsa.com, one address, thousands of homes, or call us at the Baskin Real Estate Specialist.
Here's a handy seller tip for people selling their homes, but they have children. And what's worse than getting that last-minute call? I want to come see your house in 30 minutes. Well, you've got to gather everything up, clean up the house, and get out. All with the kids and the things that they need. Try this handy tip. Have two laundry baskets. One is to put all the toys in, the things that are played with. Just throw it in one spot. It condenses the clutter, makes your house great, ready to show. You can even throw it in a closet if you need to. Now the other laundry basket has all the necessities you need, maybe more than would fit in a handy carry-on bag. It would have extra diapers, have toys if you needed to go to the park, all the cleanup things that you would need, stuff to entertain the kids. You can leave your house at a moment's notice and have everything in your trunk, just walk right out the door for a great showing and a quick sale. You can find more tips at darylbaskin.com.
So you think you're the proud owner of a piece of real estate? Well, what says someone can't come back and say, I own that property? Well, that's where title insurance comes in. Ann Rollins of Closings of Tulsa, how does title insurance work and who does it protect?
Title insurance is an actual policy that you buy. It's a one-time fee that you pay for at closing, and it protects you as long as you own the property. It guarantees that you have, first of all, good title, that forgeries, if changes of law,
things that may have happened in the past before you purchased it. I mean, somebody could have lied to you. You don't know that the owner that you bought it from was really nice, but 3 owners before that, something happened as far as an estate or someone's death, and it turns out that there was a great aunt that had right to the property. I mean, all these crazy things that you would never think would happen to you, that's where title insurance comes in?
That's correct. It does protect you against changes of law or anything else that abstractors' errors, attorneys' errors, and so it's a very good tool that we use in the real estate business.
And ultimately, isn't this why these attorneys, when you're buying a piece of property, they're reviewing the ownership of the property? Isn't that why they make all these nitpicky little requirements so that they don't have a future problem?
That's correct. They go over the title very thoroughly, and
They used to do a title opinion, and that was just an attorney's opinion, but there was no insurance associated with just the opinion. What's happening now?
most people are opting for the title insurance because the opinion is as good as the attorney. If the attorney is still in town and still practicing law, then you're in good shape. He should back up his work. But a title policy is issued by a nationwide company, and it's going to be there when you need it.
Ann Rollins, Closings of Tulsa, thank you very much for your expertise. I'm Darrell Baskin. You're watching The Future of Real Estate.
I'm Steve Currington, and you're watching The Future of Real Estate. Today we're going to talk about the top 5 things that I think you shouldn't do when you're applying for a mortgage or when you're trying to buy a house. The number one thing is don't apply for any credit. Don't make any big credit decisions. Buying a car, opening up new credit cards, things like that when you're in the loan process. We may have to re-pull your credit at some point if it takes you a while to find a house. So we want to make sure that there's not any new debt that comes on there. We also want to make sure that it doesn't affect your credit score negatively. Number 2 is we want to make sure that you don't stop paying any debt. So if there's a time that you want to make sure that every bill's paid, it's paid on time or even paid early, it's when you're in the process of getting a loan. We have customers that didn't pay their student loan, or their student loan was deferred and they didn't get it back on deferment and it reported 60 days late. That can affect your score as much as 60, 80, 100 points and take you from being approved for a loan to not being approved for a loan. Third, don't make any large purchases. So this would be things like appliances, TVs, things like that you might finance. So don't, while you're in the process of buying a house, go to Best Buy and buy a new TV and a new computer, new appliances for your house and finance those. Now, if you're paying cash for things, that's fine. I just advise you to keep in mind that you want to wait until you know that you're closing on your house and you get within a few days of that so that you don't buy a bunch of appliances and if something goes wrong, you don't actually buy the house, then you don't have all these new appliances that you can't use for your current residence. Fourth, don't cancel your lease agreements. Don't contact your landlord or your apartment complex or whoever it is that you're leasing from and cancel that lease until you know for sure that you've got a house, you're in contract, and you're within 30 days of that closing date. You'll want to let them know that. But I would advise you to just give yourself a little bit of time between when your lease is up and when you're closing on the house. So you can give yourself basically some moving time. We'll make sure that you're not moving out of one house one day and moving into the other house the next day. Lastly, don't change jobs. Even if you're going to change jobs to make more money, don't do that while you're in the loan process. If you're doing that while you're out looking for a house, just want to check with your lender and make sure that it's not going to mess anything up with your loan approval. But just as a general rule, don't change jobs. It can delay the process. It can either make it where you can't buy a house or it can delay your closing happening on time. So those 5 things you just want to pay attention to, especially first-time home buyers. I'm Steve Currington. Again, you're watching The Future of Real Estate. You can contact our office at 918-394-LOAN. That's 918-394-5626.
I'm Mike Tedford with Tedford Insurance, and America is a country of entrepreneurs. And so many people have started, and we know stories of people starting businesses in their homes. And it's fantastic to see what great accomplishments people can do, especially today with technology, out of having a business out of their home. But it's important to also recognize that a homeowner's policy does not cover your business. If you have contents or inventory that's related to your business, it needs to be insured on a separate business owner's policy. Likewise, the liability of your homeowner's policy does not extend to your business operations. So you need to talk about combining a package in that business owner's policy of liability and contents to ensure your business for success.
Hi, I'm Steve Currington with Currington Mortgage. Are you stuck in a rent situation because you got bad credit? Well, if you call us today, we can help you get your credit cleaned up so that you can be a first-time home buyer. We specialize in working with people that have credit issues, credit challenges, bankruptcies, divorce, things like that in their background. We can help you get that cleaned up so that you can get approved for a house, and we'll make it easy for you. Call us at 918-394-5626 or visit curringtonmortgage.com.
Well, it's pretty obvious almost all homeowners are going to have someone coming on their property to do home maintenance or home repair. Well, there's workers' compensation issues and there are home repair damage issues that worker may create. You think you're covered? Maybe, maybe not. Here to tell us about it, Mike Tedford of Tedford Insurance. Mike, you obviously have the expertise to tell us what to be careful of when we're having someone come do home repair or maintenance on our house.
Well, and I think of two issues that, as you brought up, and that's first, the employee that you've hired, that contractor you've hired, whether it's your home or your business, he causes damage while he's on the job. You want that to be his claim, not yours, which means that you need to be sure that you're hiring somebody that has their own insurance. You also have to be aware of what happens if they or one of their employees or their own subcontractors get hurt on the job. You want to be sure that is his claim, because that's not going to be covered under your homeowner's policy.
Well, there are also workers' compensation issues. They're your things that you're concerned about, and there's also the idea that you may become an employer of someone who doesn't have workers compensation. So what happens there?
Well, and that's especially on homeowners policy, because workers' compensation is not covered, and you do need to be aware of the fact that when you are hiring that contractor, that you are entering into an employer-employee relationship and have to be very cautious of how you deal with that. As we talked earlier, you want to be careful because you don't want to be understanding that problem after the fact, because you have a vested interest in understanding once the claim is happened.
And isn't that the real big problem, is most of us are aware of the issues that could come back to haunt us, but it just doesn't seem like a big risk until you find yourself in that boat.
That's true. That's true. We definitely find that your interest in understanding is really correlated with how big that claim is going to be.
Well, verify your contractor's insurance policies, get them in writing, and one tip that I've learned the hard way is call and make sure they are indeed in effect. Tedford Insurance, 299-2345 or tedfordinsurance.com. Thank you, Mike.
Thank you.
Well, that's all for this edition of The Future of Real Estate. Hope you've had as much fun watching it as I've had putting it together. You can find more online at darylbaskin.com. We'll see you next week.